Regarding the S&P 500, we're going to start with the big picture. Again, there's two things that I see playing out. So my primary is the blue count. There's your first wave. This is off the COVID low. 1, 2, 3, 4, 5. This was the top. And what we had in 2022 was the A wave. What we're experiencing now is a B wave. And what we get after that is a C wave. This is my base case. This is what I've been talking about for a long time. It's gone higher than I was anticipating. It's gone. I was looking for a top around 42, 43, and we're at 46. So about 300 points over where I was anticipating to see some kind of a top, which has forced me to look at a alternative, a pivot, which is this red count. And what that is looking at is a 1, 2, 3 right here. This is your fourth wave, this weird expanded flat, A, B, C, and that's your fourth wave. And then we get this right here. Then we have a 1, 2, and we're in the middle part of this third wave, which when this completes, if this is playing out, I imagine we probably get some kind of top in October, down into the end of the year, one more big push to new highs, probably early 2024 before we have to deal with the recession. So anyway, that's what we're looking at. We're basically in this inflection point of what's going to play out. Is it going to be blue? Is it going to be red? And we should know within the next few weeks, to be honest with you. This move right here is extraordinarily stretched. There's not a lot of juice left. We're seeing a lot of markets not following it. And so I'm going to get into what I am looking for in order to help us determine what's playing out. And it's really simple for me. If I get confirmation, it's basically this: from this top that we had, or if we go higher, wherever the top is, if we get a 3-wave move that holds a key support level, we're going to put all of our cash into the stock market in a very short amount of time and potentially go on margin. It's an aggressive move, but if we're getting confirmation from a macro standpoint, there's no black swan. We're seeing a resilient economy. Inflation continues to kind of stay subdued. And we get this kind of technical 3-wave move that holds support, we're going in. And our focus will be mostly what we have right now, just AI-focused tech predominantly. On the other hand, if we get a 5-wave drop that breaks a key support level, I imagine we'd be hedged by then. Our signal would probably trigger before that. But we're holding on to a decent amount of cash. And we would just wait for target levels that we would identify to hit much lower before we start putting that to work. But our main goal is to get ahead of this recession. Whether the top is here or the top is here, our goal is to have an outsized amount of cash so that we can sleep at night. We're not the ones holding the bag, and we can buy left for dead AI stocks at the very beginning of this micro trend. So that's the kind of overall general theme that we're looking for. This is the big picture. So if we analyze just this part right here in the S&P 500, so this is what we're looking at. And this is a daily chart starting really from the October low. What the blue count has going forward is this. This right here is not a first wave. This overlapping mess of a pattern, it doesn't even really fit a diagonal. The only thing that it really fits is just a 3-wave pattern. 1, 2, 3, there's your A wave. 1, 2, 3, B wave. C waves are always 5-wave patterns. So 1, 2, 3, 4, 5. I mean, it's pretty classic ABC pattern, which is what you see at the start of a bigger B wave, right? It's an A, B, C pattern. So that's what this count has going for it. What the red count has going forward is this move right here looks and feels like a third wave. A third wave is what you want. The third wave is almost vertical move, exuberance, overbought conditions, heavy volume, short dips that get bought pretty quickly, right? We don't typically see those at the end of a move, which is what the blue count says. The blue count says that we're in a C wave. 1, 2, 3, 4. We have an extended 5th wave that feels like this third wave. So that's what the red count has going for it. So I'm open to either one playing out based off the analysis I've done. I'm sticking with this blue count, and maybe we just kind of stick, trade choppy to sideways before we start really pricing in a recession. But this count would be having us likely going into recession in Q4. early Q4 to mid Q4. So anyway, that's why I'm following price. This will all get baked into price. What I found very interesting today is these shades right here. These are the time factors we do. They're basically cycles. All, cycles are everywhere. They're very much present in stocks. And we look for reversals within them. And so what matters with these shades is how is the market trading into it? We tend to see a reversal. And so we were right in the middle of this time factor, right at this key level, 4615, just underneath it. And we got this key reversal. You see that right there? When you see that kind of, this is a bearish engulfing candle. We gapped up and closed near the lows. And this one candle ate up 5 trading days prior. That's what you call a key reversal. That's what you look for when you're looking to reverse trend. A lot of people will want to like sell before the trend is over, short before the trend is over. I've been guilty of doing that before. But one of the first things that happens when a trend reverses are these key reversals. And we get them all the time. I mean, look at the key reversal in October, like gap down, huge recovery. That's a key reversal right there. And they're all over the place. Here's another one where we gap down on the close, end it right here. And then all of a sudden the next day we gap up. We had another one right here. We gapped up, closed on the low. But this way, it was a key reversal, but it wasn't really telling you what was going to happen. All reversals most of them start with these key reversals. But you don't know if it's going to be a large one or a big one. That's where our levels come into play. And so what we need to see for the blue count to happen is a 5-wave drop that breaks 45.15. And if we zoom in on this, keep in mind, just to go back, if this is a B wave top, then we're looking for a C wave, a large C wave, that takes us down to this region. And C waves are 5-wave patterns. All of them are. So, and these patterns are fractal. So a tiny one builds into a bigger one, which builds into a bigger one until you hit your ultimate target. So that's why I'm always looking at the smaller time frame. I'm like, did we get a 5-wave drop to the major high? And so that's what we're looking for right here. It's a 5-wave drop from this high that we were looking for. And so far, from what I can see, we only have 3 waves down. 1, 2, this looks like a 3rd wave. One could count this as a 5-wave pattern, but to me, proportions matter. So to say that, we have this long 2nd wave and a super tiny 4th wave right there, and there's your 5, that the proportions don't really line up. So I'd want to see probably tomorrow be somewhat of a sideways day that ultimately closes on the lows. If we get that, then we have 1, 2, 3, 4, 5 waves down from a major high. And that would be your first warning. But that doesn't mean you sell everything and you short or do anything like that. We need to see more proof, and we need this 5-wave pattern, if it develops, to develop into a larger 5-wave pattern. And once that happens, then you pretty much know that there's a big reversal underway, and you can get ahead of it. So that's what we're trying to do right there.